Okay, let's just dive right in. Imagine watching an amount of money equal to the entire economies of the UK and France just disappear in minutes. That's not a movie plot. That's exactly what just happened in a shocking flash crash in the precious metals market. So we're going to break down what went on and, more importantly, what it could mean for the future of, well, everything.
You know, this quote from an analyst really just nails the sheer insanity of the moment. And it's not an exaggeration. We are talking about a true financial earthquake here. A massive, instantaneous evaporation of wealth that sent tremors through the entire global system. The scale is almost hard to wrap your head around, but thinking about two major countries' economies just vanishing like that, yeah, that really puts it in perspective.
It's the obvious question, right? How can a market that's supposed to be a safe haven just break like that? Well, to really understand the theories, first, we've got to look at the raw, brutal data of the collapse itself.
And it's the speed here that is just mind-blowing. Gold, which was sitting pretty near $5,600 an ounce, just plummeted $500. And silver, wow, it's on absolutely extreme move, dropping nearly $15 an ounce from its high of 122. And this all went down in like 30 minutes. It was just a straight-up, brutal vertical drop.
So you hear this term Six Sigma event, and you're probably like, what does that even mean? Well, basically, it's what statisticians call something that should almost never, ever happen. We're talking once in a million years type of stuff. And this crash was beyond that. So the takeaway here is, this wasn't just a bad day on the market. No way. This was the system's own machinery failing under a crazy amount of strain, a total cascade that just broke the machine.
So what caused the machine to break? Well, as the dust started to settle, two completely opposite stories emerged to explain the chaos. Was this a deliberate, coordinated attack, or was it just the market doing what markets do? Let's look at these two competing narratives.
On one side, you've got the attack theory. People who believe this see that classic stairs up, elevator down price action as proof of a coordinated takedown by big institutional players, the so-called banksters, to just smash the price. But on the other side, you have the correction theory. This one argues it was a natural, even if it was super vicious, shakeout of an overcrowded trade. That's basically when everyone and their dog is betting on the same thing. The idea is that it's a necessary evil to clear out the weaker players before the next big move up.
And this is a really powerful point, coming from a real insider. What Robert Gottatal is suggesting is that maybe the why of the crash doesn't matter as much as the what. In his view, these violent purges are actually healthy for a long-term bull market. They wash away all the complacency and build a much stronger foundation for the future.
Okay, but just when you think you got a handle on it, this is where the story gets really wild. Just as it seemed like we had two decent, if totally conflicting explanations for the crash in the West, data from the other side of the world just blew both theories right out of the water.
I mean, while traders in New York and London are just watching their screens in horror, the market in Shanghai was telling a completely, and I mean completely different story. This just shows you how fractured the global metals market has become.
Just look at this. It's insane. As the price on the COMEX, the main U.S. exchange, is cratering to a low of $107 an ounce, the price on the Shanghai exchange is rocketing up, hitting the equivalent of $149 US. This isn't just a small difference. It's like they were trading in two completely different realities.
Let's just focus on that number for a second. $41.50. Let that sink in. That was the premium per ounce of silver being paid in China over the U.S. price. An arbitrage opportunity that's basically risk-free profit of that size is, well, it's pretty much unheard of. You just don't see that. And it makes you ask a much, much bigger question.
And that's the billion-dollar question, right? Was this just some weird market fluke, a strange anomaly? Or was this a deliberate, strategic move by China to run the price hot on purpose, creating this powerful magnet to literally pull physical silver out of Western vaults and into their own?
You know, things like this don't just happen in a vacuum. To really get the bigger picture, you have to zoom out and look at all the other pressures that were building up in the system right before everything went haywire. These factors really set the stage for all the chaos.
So, what was going on? Well, first, the COMEX makes it more expensive just to trade silver by hiking up margin requirements. Then, the Fed comes out and basically says, nope, no rate cuts, which is usually seen as bad news for metals. And at the exact same time, you've got major refiners literally saying, sorry, we can't take any more silver orders because of supply problems.
And to top it all off, China had already put the clamps on silver exports. You can just feel the system being squeezed from all sides.
So how do we tie all this together? You've got the crash, the two different theories, this crazy thing happening in Shanghai, all these pressures on the system. You start connecting all those dots. And when you do, a much bigger, overarching picture starts to form.
And the big takeaway from the source material is this. This wasn't random. It wasn't just a correction or a simple attack. It was a signal, a warning shot, really. It was a shot across the bow in a much larger, undeclared conflict for control of the world's physical precious metals.
This quote just sums it all up perfectly. The flash crash wasn't the war itself, but maybe it was the first major shot fired. And why does this matter to you? Well, because a war over physical metal isn't some abstract game that traders play on a screen. This has real-world consequences that could affect everything from the stability of our currencies to the supply chains for the phone that's probably in your pocket right now.
And that's where we're left. If this whole thing, this absolutely insane flash crash, was just the opening move in a global metals war, then everything we thought we knew about these markets is up for grabs. The battle lines have been drawn, so really the only question that matters now is, what happens next?